Why does corruption hinder economic growth? Imagine a country trying to grow its economy like a car trying to accelerate. Corruption acts like a roadblock, slowing down progress and making the journey more difficult. When we look at economic growth, we focus on how much more a country produces over time. This is measured by changes in gross domestic product or gross domestic product per person. But corruption can make this growth harder to achieve. It affects the main drivers of economic output and growth, which include investment, productivity, and innovation. First, corruption discourages investment. Investors want to put their money into projects that will give good returns. But if they have to pay bribes or deal with unpredictable rules, they might think twice. This means less money is spent on building factories, roads, or schools. Without enough investment, the country cannot increase its capital stock, which is essential for producing more goods and services. Foreign direct investment, which brings in new technology and expertise, also drops in corrupt environments. This slows down the growth of the economy because less capital is available to expand production. Second, corruption harms total factor productivity. This measures how efficiently a country uses its labor and capital. When corruption favors those who pay bribes rather than those who are most efficient, resources are misallocated. Instead of supporting the best ideas or most innovative firms, corrupt officials might give contracts to less capable companies. This reduces overall productivity and makes it harder for the economy to grow faster. Innovation and technological progress also slow down because firms are less willing to invest in new ideas if they fear corruption or unfair treatment. Third, corruption creates political instability. When governments are seen as corrupt, it can lead to protests or changes in leadership. This instability makes businesses hesitant to invest because they worry about sudden policy changes or expropriation. And certain policies mean fewer long-term investments, which are vital for sustained growth. Poorly designed or inconsistent policies can also lead to economic distortions, like inflation or misallocation of public funds, which further slow growth. Fourth, corruption can increase inflation. When government officials divert funds meant for public projects or inflate prices for contracts, it leads to higher costs and prices. Over time, this reduces the real value of savings and investments. It also discourages people from saving or investing, which are key for economic expansion. When resources are wasted or misused, the economy cannot produce as much as it could otherwise. Fifth, corruption affects human capital. Public services like education and healthcare are vital for developing skilled workers. But when funds are diverted or services are of poor quality due to corruption, people do not get the education or health they need. This limits the growth of human capital, which is crucial for long-term economic progress. Without a healthy, educated workforce, productivity cannot improve and growth stalls. Lastly, corruption increases income inequality. When elites use corruption to capture economic rents, wealth becomes concentrated in a small group. This reduces social mobility and limits opportunities for the rest of the population. High inequality can reduce overall demand because many people have less money to spend. It also discourages investment in human capital, which is necessary for sustainable growth. In simple terms, corruption makes it harder for a country to grow by discouraging investment, reducing efficiency, creating instability, and widening inequality. Countries with less corruption tend to attract more investment, have higher productivity, and enjoy more stable economic environments. That's why fighting corruption is so important for boosting economic growth and improving living standards for everyone.